Hello ladies and gentlemen, Jay Tyler here. Welcome back to Jack Fund Management. We will put out a video on finance and news basically bi-weekly. So if you would have an interest in that, do subscribe, give this video a like, and hit that bell notification icon to keep updated on all that we do here. Alright, in California, Innovative Industrial Properties, ticker IIPR, has bought ground for $51 million. As of this month, they reported a 100% leasing of 75 controlled properties with a focus on cannabis, pulling in cash flows rapidly. Such prosperity translated in part to a mushrooming dividend from IIPR, roughly 40% in 2018, 186% in 2019, 24% last year, and 21% so far this. They have generated NNN REIT cap rates or triple N cap rates, a central estate valuation measure, net income to purchase price, and targeted properties with a 10 to a high teens cap rate. We got in Digital World acquisition, ticker DWAC, at around $15. Trump will receive 875 million in shares, according to an S1 on DWAC. Trump would get a redemption price of about $10.21 per share. On merging, this company will get titled Trump Media and Technology Group Corporation. Based on 74 million people in 2020 that voted for Trump, if we count them as MAUs, plus over a 5-year period, if they ever get to 100 million, even at a pretty high price of circa $60, that would give them an evaluation of around $6.9 billion. Having warrants exercised puts the share count at 43 billion. 6.9 billion with 43 million shares, plus some discount for time to reach 100 million, puts a price around 100. Still, it has more questions than anything. A pro forma statement has yet to come out. It may have a statement to protect member privacy, no financials or business plan, just a prospectus that could make a lot of bag holders, pumpers, and bag handers. People may grift this to you. We would have some time of silence for anyone who mortgaged a home at 60 plus. Try to keep in mind Trump will award himself 40 million shares and will dilute most holders. Iceberg Research said Trump may renegotiate this deal at an expense of shareholders people have and may keep getting dumped on, largely duped by Flash. On a nearly 20% drop in a day, some of these prices, and those that may stir this up, could look like an anathema. Alphabet, ticker GOOG, shrugged at these Apple iOS policies. They hauled in the biggest quarterly revenue in 14 years. YouTube grew 43% year over year this quarter, not even accounting for subscriptions to YouTube Premium/Music. Advanced Micro Devices, ticker AMD, reported better than presumed earnings amid data center sales doubling from a year ago. Mighty sales in Ryzen, Radeon, and Instinct processors. CEO Dynamo Sue remarked she envisaged component shortages easing in 2023. They seem firm progress on the Xilinx deal, fully validated by year-end. Many crucial graphics chip makers and semiconductor titans moved skywardly. Nvidia, ticker NVDA, one of these, as Facebook FB outlined intentions to further Facebook Reality Labs. A world-class group of researchers, coders, and engineers will work on haptic interaction and telepresence. During all that blah blah, a dip we love to buy, Facebook, ticker FB, showed what a lot of real investors care about: profitability. EPS grew 19%. CEO Zuckerberg, who said he feels excited, referred to this fact they will play an integral role in building out more things for creators, commerce, and this metaverse. In terms of metaverse, they will disclose financials for Facebook Reality Labs to reveal augmented reality, virtual reality, and AI breakthroughs. They, ticking every important box, authorized the 50 billion increase in share repurchases and had operating income rise by 30% to $10.42 billion, over and above DAUs, beating all outlooks, meeting 1.93 billion. This, needless to say, showed highly incorrect and actually inverse assumptions some made by linking Snap to others. It only made more of an opportunity for Snapchat, ticker SNAP. In other respects, CEO Zuckerberg avowed a lot of these exposés looked like coordinated efforts to use leaked documents for a purpose of painting a false picture. Get real. Per usual, Washington probably loves this. Many senators have some positions in Facebook. Hickenlooper, for instance, has up to 500K in it. Wyden of Oregon, Dingell, so on and so forth. Khanna, who sits on an oversight committee for reform and antitrust caucus, reportedly has up to $1 million in FB. They more than likely take this as a sweet buying opportunity. Zuckerberg also noted polarization started rising in America before he was born. While many used Evergrande as merely a flashy title, spillover could occur. Seriousness around reining in debt and a push for quality pressured on some higher tech. They also have a zero-tolerance virus policy, China making up around 16 to 19% of global GDP, and widening, obviously more now than earlier, sways global growth. Some US equities and treasuries, 10 and 30-year yields slid a bit, while 2 years rose. This sentiment, seen more world-round, Britain and Europe weighted similar moves. Flattening yield curves could make for some unrest, and falling yields, usually a net positive for stocks, now may have questions of growth add mixed, triggering inflation. If one, in this case, a state, does things right, one has nothing to hide. We more and more see China has some serious problems. Xi has tons of pressure on him, keeping up bluffs and silence. Lucid Motors will deliver a flagship sedan. Lucid Motors, ticker LCID, will also get a first SUV out by 2023, Gravity. With production in-house, they have an AMP1 advanced manufacturing plant and LMP plant for powertrains. Lucid Dream has 520 miles of range, and they surpassed the cap on Honda Motors. They, starting from ground up, make battery packs, software, and inverters, and will inch into China, Europe, and Middle East. Street analysts had lofty calculations for Apple, ticker AAPL. They still had sales up 29% over last year. Cook said demand remains intensely durable. Chip providers remain tight. Market demand for royalty in this chip sector, such as aforementioned AMD and Nvidia, look basically perfect. Amazon now looks more like a bellwether more than other things. They operate in groceries, historically not a golden business. Asset heavy, they function as a seller and warehouser. Bezos did probably get out to space and give Jassy a leftover. Microsoft, ticker MSFT, which recently acquired an interesting content moderation platform, 2Hat, and also briefly surpassed Apple in most valuable company title, has Azure, evidently snatching clientele from them. Within FANG, Facebook, ticker FB, may turn into Meta. Amazon might no longer have earned a spot, while Netflix, ticker NFLX, definitely has once more secured this high rank. With Facebook turning to Meta and Google really Alphabet, we could rename FANG MAANA. Yet we should probably add royalty Microsoft and make it MAMANA. In this more playful yet often useful categorization, what acronym would you all use? If you have any ideas, drop a comment underneath, 6 letters maximum. This holiday season may come in strong, households having record cash. Founded in 2003, Revolve Group, ticker RVLV, leverages tech, data, and influencers. Sapient Management sells through Revolve and Forward, mixing in sophisticated media marketing. During this pandemic, they saw cash flow improve. All things heading a correct way, active customers expanded. AOV, average order value, as well as total orders placed, made superb strides. They signed Kendall Jenner. Her having 190 million followers helps. Sales have bursted higher. They keep a margin profile on point. Healthy demand led them to fuller priced sales, shallower discounts, more ace margins than others in this coverage, second best EBITDA. They outdo others on practically every line. Avis Budget Group, Inc., ticker CAR, on ideas of robo-taxis, reports earnings. Analysts expect 82% revenue growth and record EPS. On inking a deal with a rental car giant, Tesla hit a $1 trillion market cap, a new high, gambling up 13%. Elon Musk afterwards saw personal wealth launch $36.2 billion in one day. Car enjoyed this action too, with elevated revenue per day, more private car travel, those shunning public transport. Wozniak said nature over humans. Blockchains could get used for elections, yet politicians probably would not like that. Gensler looks a bit confused to us. How VIEs get accepted, and how Bitcoin can look any more nefarious than a double or triple leverage, say, inverse nat gas, for instance. Go figure. In a way that FDR outlawed gold, some US officials could perhaps require some amount of Bitcoin to get turned to dollars one day. Way out if they had to. Circa 1933, Roosevelt realized he could not print an adequate figure of greenbacks for planned spending. Then in 1971, as gold came out of U.S. stockpile due to, in part, large deficit spending, Nixon formally unpegged U.S. dollars to gold, no longer giving convertibility. CBDCs float about, and all this backstory could interlock in some ushering fashion. Gensler still has acted reluctantly per spot Bitcoin ETF. SEC members say they probably will not permit a leveraged Bitcoin product. SEC constituents also apparently claimed no payment for order flow or foul play in this GameStop theater. Coinbase, ticker COIN, up 11% over a week, has received a price target of $500. And Netflix with Squid Game wildness sprang to a new high after earnings. As we alluded, more formidably cementing itself in this FANG, or new acronym to come. Cosmos, ticker ATOM USD, dubbed an Internet of Blockchains, seeks interoperability among blockchains. They use a POS platform, proof of stake, roughly an assertion for a person to mine or firm transactions in accordance to how many coins they own, which runs on Tendermint, an algo highly suited for scalability. Although we usually like cash flow businesses, Yearn Finance, ticker YFI, looked a bit interesting. It also recently brought on Phantom Network with a POS and a higher throughput. Of course, this realm has a plethora of projects, of which only those best will make it long term. One can view all superior and latest crypto trends by signing up at that link posted below. BTIO had a more than successful debut. ProShares 2 came out with the first leveraged ETF way back. It surpassed that joke of BUZZ within an hour. 440 million in volume shows demand. This could easily grab $1 billion shortly. Maybe some HFTing, yet likely mostly sticky. Now, a use case for GLD has lessened. At one point, GLD, a reflection of gold bullion, had more assets than SPY. Paul Tudor Jones professed he way prefers Bitcoin as a hedge over gold. Stiffer central bank action could constrict some growth. Caterpillar looked like they confirmed this by some slumping sales in China. Circling back, China struggles. Pinterest, ticker PIN, sans any deal or not, has revenue, growing 125% year on year. Not just a growth at any cost story, like some that have suffered. PINS has a cash flow as well. It swung to profitability. They just have to prove they can take MAUs. Like many tech businesses, now more adjusting, PINS has pulled a lot of customers in 2020. Now they have to streamline this platform to seize mountainous ARPU upside. It trades at extremely reasonable times 14 sales. ARPU, average revenue per user, has made consequential progress, standing at this most recent quarter $1.32. Facebook, ticker FB, has $10.12 of ARPU. This infrastructure, if you recall, bill has gotten more optimism, as a vote may amend some more settled upon spending. Yet, as usually all things Washington, infrastructure has still fluctuated. This came to a nexus around a recent Treasury auction that manifested some demand, with some lingering questions around China. We still feel good about oil and industrial metal, keeping in mind oil went negative not too long ago. Record FCF for these petroleum producers looks weighty. They could likely return massive mounds of dividends back, and by this, shares can get appraised up. Sure, we may have an electrified future, yet that could happen in part supplemented. Actually, Earth looks about $600 billion underinvested in CapEx to meet demand. Regardless of Biden whimpering, all but 5 OPEC Plus members failed on quotas. Many energy drinks with aluminum shortages cannot even make enough cans to supply demand. With this US economy heating up and somewhat stuck, companies without profits that only add to deficits, especially if they have rises on expenses, have came out of vogue. We have not seen Buttigieg do much about supply chain lockups. They talk too much, we look for solutions. Markets have oscillated for leadership, other than, as we said, financials and energy, and some mega caps. PPI, Producers Price Index, has had a pretty long-term breakout, looking like an 80s period. This dovetails largely with that oldest baby boomers turning 35 in 1981. During these late 80s onward, Dow stocks did amazingly well. We keep an eye on unemployment. We've had a strong thesis on United States Steel Corp, ticker X, harking back quite a number of videos ago. They reported a new stock repurchase program, and this American steelmaker issued a big dividend, guiding investors with an upbeat outlook for 2022. Steel shows no signs of stopping from Nucor to our favorite X. C.E.O. Burritt said they have had, quote, undeniable progress, close quote, and will directly reward shareholders. They still think this market under-rewards them for next year, even after this best ever annual profit. They'll put out 500,000 tons of iron, as simultaneously in Asia, we have witnessed high energy demand and lower supply, suppressing steel outputs. Automotive demand with an inventory to sales ratio close to 1 means requirement for steel. As GM indicated, increased automotive demand for at least 5 years, as well as construction dawning, both lean heavily positive. This immense serendipity provided them with a net cash positive position, enabling them to protect during cyclicality, as well as invest in novel projects. Q3 looked exceptional after Q2 had beat on a GAAP basis on EPS with $3.53 over a consensus of 68 cents. They shipped 4,214 tons of steel, accumulating 2/3 YOY. More have stayed home, more appliances get used, obliging fixing and replacement. Inflation has and can keep showing up in earnings, and the strongest brands that can pass on costs win. Back in 1998, Lululemon, ticker LULU, started in Vancouver, Canada. Today, they operate 523 stores across several continents. They offer an array of healthy lifestyle products featuring top-line growth for a decade of close to 18% CAGR. It trades at a premium in part by virtue of outstanding margins. Think LULU versus an Under Armour on quality and so on. Here we have a real investment. A segment for men has focused on innovation with 2-year sales growing 31%. PE has only come down. As earnings popped, a Generation Z survey asked about thoughts on things such as cannabis, food, e-commerce, and ESG. Lulu got a high grade. An increase of more than 60% year on year. They still guide for 25% growth for this full year. They forecast a monumental year-end. A thoroughgoing brand, they have a 15 and 17 base starting pay per hour with a bonus of $3 per hour. They will hire 8,000 new teammates. Throughout this pandemic, they did not lay off anyone. They paid everyone and renters in full. Oil has remained tenaciously high toward $90. Citigroup CEO on a summit warned of a brutal winter for markets. Oil and energy sectors have mirrored this. Fraser also sounded an alarm on persistent bottlenecks, which have in part catalyzed names like Hertz and more pertinently ticker CAR. Crude oil still has apparently OPEC plus insufficiencies. This, which ties slightly into Evergrande, weaving into China drawing down power plants with less LNG, liquefied natural gas, and thermal coal. Hybridization, suburbanization has driven oil demand. We hear of this trend in suburban personal transportation demand. Tethered to this, myths may circulate about OPEC capacity, and this IEA may even overestimate. ANOAA, a National Oceanic and Atmospheric Administration, foresee cooler than normal conditions next month. This coinciding with that city's CEO forewarning lends itself to a lifting of domestic heating demand. Out of Merck & Co. or Merck, we have many antivirus options. Shots, now pills. People keep getting out a lot more, and America will, this month, give way. So foreign entrants will come on in. As people connect more, Match Group, ticker MTCH, remains a premier vanguard in this communication sector. Witnessing a mass-scale uptake in online meetings, turning relationships, this theme looks like a way things head. They have niche brands to cater to certain demographics, as well as acquiring Hinge. 2020 saw Hinge transcend to a third most downloading dating app. Operating income margin grew a brilliant 30%, stepping up from 28% in Q1 of this year. Revenue loaded up 27% YOY, and subbing users grew 15% versus 12% in Q1. Never complacent, MTCH keeps procuring emerging brands such as Azar, aforementioned Hinge, and many others. For FY21 outlook, management counseled shareholders for a 25.5% revenue growth, following Hyperconnect as a winner. Blackstone Inc., ticker BX, has a performance and reputation that attracts many. For them, AUM has increased by 13% annually over a past decade. Blackstone Mortgage Trust, for instance, has $17 billion in assets. Among many other things, they have perpetual contracts and revenue predictability. Revenue of $3.04 billion, up 108.2% YOY. They have $731 billion assets under management. They had a better outcome this quarter than any out of a 36-year history, said Schwartzman, chairman and CEO. BX declared $1.09 per share quarterly dividend. FRE fee-related earnings jumped 28% year over year, returning capital to shareholders in part via 2.9 million common shares this quarter and 6 million over LTM these last 12 months. Real estate we have banged on about for big skilled players stands tall. And no surprise with all this estate appreciation, Blackstone recently sold Cosmopolitan of Las Vegas for $5.65 billion, a most profitable single asset sale of all time. They have a $2.3 billion credit revolver, with a first-rate rating. Supplemental to all this, they have an $8.2 billion in cash, treasury, and other position. Not an ideal margin business, airlines still represent a required industry. Like in 08-09, not many accepted a cutting down of choice when it came to statewide travel infrastructure. As we said, for instance, American Airlines, ticker AAL, beat revenue by 50 million, beat GAAP and non-GAAP EPS. They also had a load factor of 78.7% versus 77%. Not all airlines created equal. Delta Airlines has an overweight rating at JPM with a target of $61. They outdid revenue by 689.39 million. Delta, ticker DAL, retiring a portion of a fleet helped them stimulate fuel efficiencies. CEO Ed Bastian predicted that by next summer they will have returned to fully normal business. With a busy and strong holiday season in tow, Delta exclaimed to next month international travel could rapidly pick up. After 11/8, U.S. officials assigned permission for foreign travelers back in. Thank you everyone, ladies and gentlemen, for stopping by. For clarity, bona fides, and all things finance and markets, and key news, join Jack next time.